You're listening to In-House, Canada's housing podcast, where we share the latest on Canada's housing market. Hi, everyone. I'm your host, Joelle Hamilton, and joining me in the studio today are Tanya Burasa-Ochoa and Kevin Hughes, two of CMHC's Deputy Chief Economists. Welcome back to the studio.
Thank you.
And together we're going to explore the fall 2024 rental market report. And correct me if I'm wrong, I think we've been releasing this report since 2001. And that means that we've been assessing the rental market for a few decades or a couple decades now. And in recent years, we've seen that a number of factors are converging, and they're creating an environment or like a rental market environment where demand is very strong, and that, supply is growing, but still not enough to meet that growing demand. And in 2023, our national vacancy rate was 1.5%, and there was an 8% year over year rent increase, and that was seen across Canada. So today we're going to see what's changed since that last report. So I read in the fall report that the national vacancy rate increased to 2.2%, which in this last year, which is up from that 1.5% that I had just mentioned. And rent growth also slowed slightly. But why are renters still having a hard time affording their place to live?
Right. So, I think you gave a good assessment of the general picture. These changes, it's rare that they're very large in scale. So they're incremental, changes. There has been easing, but, to your question, I think that the main factors that we saw driving this story in the last years are still present right now. So, we have an acute and a chronic lack of supply, which is driving up rents, especially turnover rents. I know that you've looked at that in particular, Tanya. And so you have that. You have the economics of it as well. So new households, do people leave their families to form new households or not? The tightness of the rental market makes it difficult to find a place. So there's really, the supply story continues to dominate a lot. And of course, for people who may be ready to buy a home, that purchase is still beyond the possibilities of many people. So they're still in the rental market. And then we have very strong demographics that are explaining this as well.
So I know the demand is still strong in the rental market. But I did read in the report that we've seen kind of the highest supply growth in the last 3 decades, which I thought was significant. Can you tell us what's driving that trend?
Sure. So you're right. There's been, in fact, record growth in terms of new completions for purpose-built rentals. There's a lot of factors that explain why we're seeing those numbers, which is actually a 30-year historical average. So on one hand, you have public sector support programs at all levels of government. You have new policies that have been implemented to help build more housing. It is to say that could be different, when you're looking at different provinces or different municipalities. But in the end, we do have, more programs and support to see more building. So we did see, some cities lead the way in terms of these new completions. So Montreal, first in line, over 14,000 units completed in the purpose-built segment. So it is a little bit lower than what we saw last year, but it's still very high. We also have Calgary that recorded, I think, 7,000 new units completed in the purpose-built segment. And you also have Ottawa, Edmonton that have also seen increases in terms of the new supply that is added to the market.
You could also point to the inflationary period that we just gone through. So That I think has definitely slowed down, or as the pace normally of rental construction or apartment construction. So normally, these things advance at a certain pace, but we have heard and observed difficulties for builders to adjust, and that has postponed things. So normally we would have seen maybe things happen last year that we didn't, and now we're seeing maybe more of a convergence of that supply.
So we did see regional variations in rent growth. So across the country, and things are different in our major cities. What is driving these trends?
For us economists, we're always looking at supply and demand factors, and how these things work together to amount to price and price growth. So it's when you mention the regions and markets, I mean, housing is very much a regional phenomenon. We talk about Canadian averages, but you really have to look at the city base and to see what's happening there. So if you look at Calgary, for example, you have a strong economy, you have a stock that tends to be higher priced as well. So that is driven things up more. In Toronto, well, there's been easing right now, so that growth hasn't been as fast, so it's slowed down. Montreal, Vancouver, it's been relatively constant, and you have even your Ottawas and your Edmontons who have actually accelerated even the price growth based again, on stronger demand.
So I want to look specifically at turnover rent growth. And according to the report, if you're looking for your first rental apartment or you're looking to move into a new rental unit, you're going to pay 23.5% more than the previous tenant. I thought that was a significant number, like 23.5% more. Can you talk about this trend in the turnover rent growth and what we've seen across the country?
Sure. So we did introduce this new indicator, which looks at turned over units and turned over rents. So basically, in other words, it's really a unit that is welcoming a new tenant. And so it was quite eye-opening to see the difference between our classic indicator of rent growth, which we used to look at, and this turned over rent growth. And so you're right, we did see a 23% increase. So when we're looking at rent-controlled provinces, we're actually seeing that the difference is even greater. So in fact, when you have a unit that is turned over, landlords are kind of using or tapping into that opportunity to increase the rent more significantly. And so in regions like Vancouver, Toronto, or even Halifax, we're actually seeing even higher turnover rent growth. And so for Toronto, for example, that was really the record high when we're looking at Canada-wide data, which is actually 40%.
Renters knowing that they're going to, if they move to another unit, they're going to be paying, the national average is 23.5%. But, as you mentioned, it does vary by region. Is that making them stay put, or are they still interested in moving?
So that's definitely limiting the number of tenants that are moving. So it's really contributing to the fact that a lot more tenants are staying put just because they will be facing, higher rents if they're moving. And so this is really potentially signaling also some mismatch between the housing needs of the tenant that may be changing and what they currently have as a housing situation. So we could even imagine a growing family, for example, that would need an additional room, or a couple that, would likely be separating, but, that a lot of housing options are just maybe not available to them. And so we might even think of what's hiding behind those numbers is a potential mismatch for some tenants, for sure.
This leads to what we, in the academic literature, we call like people who are either overhoused or underhoused, and both happening at the same time. So you have people who would like to downsize, but they can't even afford a smaller apartment than they have, because that is, and then the opposite of the family that you were just talking about, that example, they're underhoused and they can't find, there's a mismatch there.
So Kevin, you mentioned that there are renters that are underhoused and overhoused. Can you elaborate a little bit more on that?
Yeah, so as Tanya was mentioning before, there are quite likely situations where people normally could be living in a smaller unit with less bedrooms, but they can't afford even a smaller unit, which sounds kind of odd, but that is quite likely a situation. And conversely, people who need a bigger apartment can't. And this leads to, I think a question I'm asking myself a lot these days is, we hear a lot of anecdotes about, cohabitation, people living, sharing an apartment with many more roommates than normally the size of the unit would dictate. And you even hear of people sharing rooms. These are still anecdotes, but it's symptomatic, I think, of something. And I'm just wondering, to follow up on your question about the trend, if there were to be we see some easing, but I wonder if, in the next rental market survey, it turns out that easing has maybe prompted some of these people to move out and to seek these newly vacant units. We'll see in 12 months, but I think it's something I'm definitely going to follow.
So can you now, Kevin, walk us through the key factors that shaped rental demand in this last year, and then also dive a little deeper into how these trends varied across regions in Canada?
So we have, your main factors, which are demographic factors, and the labor market is usually the two main drivers. And so we have seen, as I think everyone has seen, over the past years, quite strong immigration, but also strong interprovincial migration. We tend to talk a lot about the international story, but there's also a lot of movements within Canada, which does also stimulate demand as well. So that's been also at play. Getting back to the international side, I think in July we had over 1.2 million people on an annual basis. So that's quite a lot. And of course, when we look at housing, you're always looking at something that doesn't adapt as fast as you would want it, as like for other goods, for example. So you can't just increase production so that is definitely one story. And I think that is, despite what's happening now in the context of immigration or what can play itself out in the next year or so, will still be, the demographics of it will be important. I would add also that when we look at the configuration of the Canadian population, we have aging of the population. We have people who are going more into years where they will probably want to downsize and be renters. You also have younger people who are at that stage of their lives where they want to form a household. Now, of course, with tight markets, that's not as easy. And so the demographic side, from be it migration or just the natural evolution of our age pyramid, is definitely one big factor. The job market is another one. And we've seen, of course, it's eased a bit this year. We've seen unemployment rate go up a bit. But in general, it has been stimulating people to potentially form households. But, you may have a job, but if there is no rent, if you don't have an apartment, well, that's just not possible. And we've seen this in history in markets in Canada that there was job creation, but just not any supply. So that's something, and we see that in different areas of the country where you have labor markets that have softened a bit more and has created a bit more, difficulty because there's not the jobs as much as there was, and others where the labor market is a bit more tight.
And how do wages or wage growth factor into this as well?
Wage growth definitely factors in because obviously it's what is required for them to meet their end of the month, really, and that has definitely not kept up as much, which is one of the big one of the other linked to the labor market, obviously, but it's definitely a reality that is not helped affordability.
So I want to come back to that 30-year record high kind of growth in supply and the new completions of purpose-built rental buildings. Why hasn't this record growth in completions led to or eased these affordability pressures that Kevin was just mentioning?
Sure. So we did, as you mentioned, see a big chunk of new supply that was added to the market. But we have to keep in mind that this newer stock is also on the higher priced end. And so it's, typically more expensive. And so it will maybe be more suitable for a higher income family, for example. And so for mid-income families or low-income families, these new units are not affordable. And so there is a possibility that over time, through filtering, for example, these new units could lead to more affordable markets, but it does take time. So basically, the concept of filtering is really that as the building matures, it will eventually or could become more affordable for mid or low income families in the long term. And so we've done some research on that. So that's available on our website if you're interested for more details. And to your question around, why hasn't, because of this record level of new supply, why it hasn't made the rental market more affordable. Another reason is, yes, we have record levels of new supply, but when we compare that or when we bring that per capita, we're not nearly close to the levels that we should be building to really feel, that affordability easing basically in the market. And so I do want to bring forward that, conditions remain very tight in many regions in Canada, and affordability really remains a concern. We have a new indicator that we've included actually during the pandemic, which is looking at units that are in arrears. So we're looking at the units that have a rent that hasn't been paid. And so when we compare that to the homeowner segment, for example, the difference is quite striking, actually. So we have close to 8% of units in Canada that have a rent arrear, which is close to 32 times what we're seeing in the homeowner segment. So the fact that it's higher is not necessarily surprising, but that difference is. And so just to give a little bit of perspective, that is close to 180,000 units in Canada that have a rent arrear. So with this in mind, there's definitely other indicators like, when we're looking into delinquencies for, credit cards, auto loans, specifically for renters, we're seeing that those are also increasing at a higher pace. And so, putting all of those elements together are really pointing towards certain financial pressure that is being felt amongst renters in Canada.
So I think you've both mentioned that we've seen an easing in the rental market this year. Is this the beginning of a trend? Like, can we say that it's the beginning of a trend?
That's a big question. We never usually use 1 year or 1 point of data to say, it could be, but I think that again, there has been some easing, which I think is probably somewhat of a relief to some people for sure. But overall, as we've been mentioning throughout, our chat, there's a lot of headwinds that are still present. I think probably we'll be hovering around some of these levels. Let's hope that it is the beginning of a trend, but we do have still a supply deficit that we have to tackle as a country, and we also have which is leading to affordability challenges. So I think that this is the reason why we just keep monitoring this year after year. And we've only scratched the surface in this talk about the data that's available. So I think we'd encourage certainly people to dive into the numbers at the local level to see exactly what's the story where you live, whomever is listening to us and watching us today.
Absolutely. And I'd even add, I think it's a nice place to plug in the rental development survey that SAMHC has been conducting with EY, Ernst & Young, for the past 2 years. And so this survey, asks questions to developers and investors in the purpose-built rental segment, questions about their ability to make the math work to be able to put new projects and get those shovels into the ground. So one of the results that we've seen this year is that there is some wave of optimism that is being felt amongst some developers. Again, it's very regional. Like Kevin said, we really encourage to go see what's happening, at the local level. But in some regions, we do feel this wave of optimism due to the fact that, construction costs are increasing, but at a slower pace. That support that I was mentioning around government at all levels of government, definitely contributing to some extent in some markets, and also the easing of the monetary policy. So interest rates that have been declining is also helping make the math work for developers and hopefully contributing to maybe more projects as we move forward.
So that's a wrap on today's podcast. I want to thank you both for joining me today and walking us through kind of the key insights and the key findings of our latest rental market report. And Tanya, as you mentioned, if our listeners today are interested, we have the link to the full rental market report in the description of our podcast. So they can just grab that, copy paste it into their browser, and then they can explore more national findings and then also take a deeper dive into the regions that they all hail from. So, and I want to say a big thank you to our listeners for joining us again today in-house. Did you know we're not just on YouTube? You can now find us on Spotify, Apple Podcasts, and Amazon Music. Don't miss our next episodes for more real, data-driven discussions. If you're learning from and/or enjoying this podcast, please share this episode, follow us, or subscribe. Reach out. Let us know what you think. Thanks for listening, and see you next time.